Good morning, everybody. We have a mostly higher trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. December corn futures are up 2 3/4 at 397 3/4. November soybeans up 1 1/4 at 1066 3/4. December Chicago wheat down 1/4 cent at 593 1/2. December Kansas City wheat unchanged at 535 1/2. December spring wheat up 2 1/4 at 546. So we've all had a couple of days now to digest Friday's USDA report. To run through the report very quickly, I would say the most friendly numbers came in the soybean market. Almost everything about it was friendly. First off, we had the lighter September 1st stocks number. That we knew that was coming, but that's a friendly item. We then saw the harvested acreage number cut by 700,000 in beans. USDA actually left the yield number in soybeans unchanged, but the drop in production came via lower acreage. We saw export demand increase via by 75 million bushels, rather. Crush left unchanged. So USDA is now projecting record demand for soybeans, record crush, record exports, total record demand for the U.S. So in beans, you got your carryout estimate for the U.S. For this new crop marketing year down to 290 million bushels. Stocks to use ratio projected at, I believe, 6.4%. That 6.4% stocks to use ratio would be the tightest since 2015 if realized. During that time frame, we traded a pretty wide range of prices, anywhere from $9 spot month futures up to a level above $12 very briefly. So I'd say that given that report, we're pretty much where we should be in terms of prices. There's room to go up, there's room to go down, but we're not out of line, I wouldn't say, relative to where we were the last time we saw this sort of stocks to use ratio. Now in corn, I would say that things are a little bit different here. I didn't view that report in corn as being extraordinarily friendly. In fact, I'd probably argue that the U.S. numbers were a little bit negative, if anything. We had a larger than expected carryout estimate. USDA did not make that yield reduction, but they did cut acreage by 1 million. So that's where your production cut came from. On the demand side, we saw demand cuts. USDA cut the new crop feed and residual use for corn by 50 million, ethanol cut by 50 million, exports unchanged. So your total demand fell by 100 million. So in regard to the stocks to use ratio, they're projecting a new crop stocks to use ratio for the U.S. and corn at 14.8%. 14.8% is very much in line with what we've seen the last 4 or 5 years. It's not anywhere. It's not like in the beans where we're seeing a drastic shift. It's very much in line with what we've seen. So therefore, I think a lot of people probably look at the corn and might assume that we would stay in this same price range. And I think that that's a fair argument to make. The extreme lower end of the prices, $3 up to about $3.20, extreme upper end, maybe 4.5 up to $4.70. And we're kind of toward the middle of it right now. So I guess that's in the corn, again, not a real bullish situation like in the beans, in my opinion. In the wheat, we're looking at one of the more friendly U.S. stocks to use ratios and supply and demand situations in recent years. The stocks to use ratio at 42% in U.S. wheat is still hugely burdensome, but it is the tightest since 2014 on paper. So I suppose that's friendly. So that's the small short report recap. Fund traders remain very heavily long this grain complex. CFTC released an update on Friday, of course. Fund traders were officially net long 117,000 contracts of corn as of last Tuesday. That's the first time that large money managers have been long more than 100,000 contracts of corn since August of last year. Funds were net long 231,000 contracts of beans as of last Tuesday. Private groups estimating funds to be net long a record 253,000 contracts of soybeans as of Friday's close. Fund traders also long the SRW wheat market to the tune of about 26,000 contracts. That was the estimate as of Friday's close. So we've still got a pretty aggressive fund long across the complex, especially in the soybean market. U.S. weather forecasts remain mostly dry. Now, there were some areas that saw some rain over the weekend. Nebraska, a little bit of the Dakotas, a little bit of Iowa, some of Minnesota caught some rain over the weekend. There's a system that's on the radar here this morning, pushing across parts of Iowa and Minnesota. But the next 7 days really look pretty dry for the Corn Belt. The area that's had some real major problems here weather-wise would be the Southern Plains, a lot of Texas, Oklahoma, Kansas, that area, a lot of HRW wheat area. There is a little bit of rain in the forecast about 10 days out, but it's going to be a small band of northern Oklahoma and eastern Kansas that's impacted. And there are several counties in that stretch that will see some heavy rains. But other than that, you've got no real drought busting event here at all. And keep in mind, when it comes to wheat, you've also got some dry conditions in the Black Sea. You've got higher prices in Russia last week. So the wheat has a story here short term because of this dry weather. I'm not going to get overly excited about dry U.S. weather here this time of year, this early in the growing season. But when you combine it with, the surge in row crop prices, the issues in the Black Sea region, you do have a little bit of a story here, certainly. The cattle market, we saw some cash cattle trade that was improved last week. We saw some 109 trade on Friday. I believe we even saw some 110 trade. So things there improving just a little bit. We'll see if we can get the board going here today. Nearby October future settled just below 110 on Friday. The stock market's kind of quiet here, but a little bit higher ahead of the cash open. The Dow Jones is up 15 points. The S&P is up 16. All this talk about stimulus and all that stuff continues. The bonds are up a little bit. U.S. dollars up a little bit. Crude oil is down 58 cents, trading right about $40 even in the November WTI. Precious metals are just a little bit higher. Remember, if you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on the grain marketing plan. If you'd like a little bit more information about when I'm marketing cash grain, I send out an email every morning at 6:30 Central Time. It's accompanied by a text message service. It will let you know exactly how I'm pricing corn, soybeans, and wheat, broken down by crop year, and percentage throughout the year. It's tracked every day. There's a grain marketing tracker at the bottom of every email. Tells you exactly where we're at, when the sales were made, at what prices. If you're looking for some advice, certainly check that out. It's $49 a month. You could cancel it at any time. Everyone have a great week. We will talk to you same time tomorrow.